Hi everyone, Bowen from Enhanced Asset Management here. Just back with the final update from reporting season, and I'll just run you through the results of the final two companies that we had that reported, and that was Aussie Broadband and AUB Group. So we'll start with AUB Group. So I've just got up on screen just some key financials from the result that they reported, and we saw revenue grow 13% up to 1.5 billion, and we pleasingly saw some more margin expansion coming through the business, which resulted in underlying net profit after tax growing 17%, just exceeding the 200 million mark. So management guided for a underlying net profit after tax of between 190 and 200 million, and as you can see, they just exceeded that there with the result coming in at $200.2 million, which was a really strong result for AUB. And I guess I've just got up on screen some sort of forecasts for where the business can get to, and this is provided by AUB's management team. Look, the top line is slowing down. It's not the 15 to 20% insurance premium growth that we've seen from around 2021 through to 2024. But the key here is that AUB is still going to be able to grow at a much faster pace than what the market is, and that's exactly what we're looking for in an investment case. So AUB, whilst we forecast them to grow, between 4 and 6% at the top line, you can see the margin levers they have here to pull, and if they can get all of their segments up to where they're sort of guiding their margin to be, particularly internationally, with Tice's growing from 23.5% where it was this year. If that can get up to 32%, there's a lot of leverage that can come through the business. So they don't necessarily have to grow that top line at the rate they had previously. If they can extract the margin out of the business, then it's still going to perform really, really well over the next couple of years. And in saying that, they've announced some guidance for FY26, and this is for underlying net profit growth to grow between 7 and 13% for FY26, which again is comfortably above the level we expect the market to grow at. So this is largely going to come organically. We can see here on the little breakdown that they're expecting around 6 to 11% of this to be organic growth, which is really strong for a business like AUB. And they're typically pretty conservative with their guidance, so we're pretty comfortable forecasting 10+% growth in NPAT for next year. And this one's continued to perform pretty well. It's back up over $35. It hasn't been there for very long. It had that little period in May, June where it was above 35, and we're back up there now. So we're really confident with where that share price is heading, and we say it all the time that share prices follow earnings, and AUB are expected to continue to grow their earnings at a faster pace than the market. So the last company we had to report was Aussie Broadband, a relatively new addition to the portfolio, and the results up on screen might not scream extremely bullish. However, the thesis for this one wasn't an extremely strong FY25. They actually lost a contract with Origin Energy, which was always going to impact their FY25 results. So you can see that they grew revenue 19%, which was really strong, but net profit after tax just grew 6.5%, which is a lot lower than the typical business that we'd be looking at to put in your portfolios. However, as I said at the start, the thesis here wasn't for FY25. We knew it was going to be a bit of a tougher year. The thesis here was FY26, they're going to really take off, and they're going to continue to take market share from some of the older incumbents within the industry. And FY26 is expected to continue, the growth that we expected from our thesis when we took the position back in April. So they're guiding for 14 to 21% growth in EBITDA in FY26, which was comfortably above our forecasts. And we've updated our valuation models off the back of this, and we can see plenty of upside in the share price for ABB. The other key announcement that they had in their FY25 results was they signed a new wholesale agreement to provide over 250,000 more connections. Now, this isn't factored into their FY26 outlook. It'll come through in FY27, and they're expecting this to be around about 12% accretive to their EPS, which is providing some significant shareholder value, not just for FY26, but FY27 and beyond. So their FY28 outlook, which was part of the thesis on why we took the position. It's really shored us up that this can definitely be hit, and if they can hit their $1.6 billion revenue target at a 12.5% EBITDA margin, that's going to give us a $200 million EBITDA, which is around 25% higher than what they're expecting in FY26. So the runway for growth with ABB is really clear, and continuous articles that are coming out with Aussie Broadband and the way that they're taking market share off the incumbents is really positive for the trajectory of this business. And we did see the share price really take off on the back of this result, and we've actually increased the weight for Aussie Broadband in the portfolios, which we're really happy with the way this company's worked out for us, having taken that position back in April at just below $4, and now it's up comfortably over $5. We can see this one continuing to run towards $5.50, $6 over the next year or two. So, as I said, really comfortable with where this one's sitting. Thanks for listening, guys. As always, this is general information only. If you do require any further financial advice, please reach out to your licensed advisor.